What happens when you avoid the IRS? Spoiler, it only gets worse. Welcome to another episode of the Vital Strategies Podcast. I'm your host, Patrick Lonergan, and today we're diving deep into a topic that hits home for so many business owners and entrepreneurs: tax debt and IRS troubles. My guest today is Carlos Samaniego, a tax resolution expert and IRS Enrolled Agent, and the founder of Tax Debt Consultants LLC. Carlos is here to shed light on the overwhelming world of unresolved tax issues. Carlos will give us an in-depth look at how to fix past tax mistakes, become compliant, and even how to set up payment plans to ease the burden. We'll also tackle the heavy topics of liens, garnishment, and the big question: what happens if you don't take action? Plus, Carlos will share crucial insights on how to stop those overwhelming interest rates and penalties, and how to pursue strategies like offers and compromise. This conversation is packed with actionable advice on how to resolve your tax issues and move forward. So don't miss it. Let's get started. Today on the podcast, we've got Carlos Samaniego. Carlos is a renowned tax resolution expert, and you're also an enrolled agent. So thank you for joining us today. I'm looking forward to getting into this discussion. You're the founder of Tax Debt Consultants LLC, which nobody likes owing the money to the IRS. And so anytime we can resolve those issues is good. And I'm excited to get into a little bit of my story, something I haven't really spent a lot of time talking about. And I think we'll hear some of yours. So thank you for joining us here today.
I'm excited to be here, Patrick, and kind of talking about the one thing nobody wants to talk about.
Yeah, no, this is great. So I'm just going to dive in and talk a little bit about where we've been in the past. So we had a real estate portfolio. A lot of times those loans are commercial loans, end up on 5 or 7 year balloon notes. And the interesting thing is we're used to sort of real estate values continuing to go up and to the right. And but we've been through times in 2000, we'll call it 8, 9, 10, where that wasn't always the case. And we had those notes come due, and it put us in a very interesting situation. We had some cash on hand, but we ended up owing some money to either keep those, being able to refinance those debts, or if we didn't want that property anymore and we listed it and sold it, we had to come up with some cash at close to get those deals done. So we were really hustling on the business side of things to generate income, to sort of make all of those things right. And we sort of ended up with a double whammy, which was really challenging and maybe even a little embarrassing. It was like our asset values were going down. We were living through this pretty rough time in the real estate world. A lot of our friends were filing bankruptcy. We were fortunate to avoid that. But what we ended up with was we ended up with a tax bill without any cash. And so it was, I'll say, scary. We think about the government. They have, armies and missiles and all those other things, and I don't like owing them money. So we were faced with a situation of like, okay, we don't have the cash to pay this tax bill. They are sending us letters that are awfully scary. And it's like, you kind of want to stick your head in the sand and sort of pretend it doesn't exist. But that's a pretty dangerous place to be. So I'm looking forward to getting into this discussion on, how we pull our head out of the sand and sort of face this problem head on and come up with a game plan to fix it. So thanks for joining us here today.
Absolutely. This is going to be exciting because, like you said, this is one of those subjects that you can't ignore. Mm-hmm. And Patrick, the last 4 years, everybody ignored their past due taxes, mm-hmm. And kind of almost with the blessing of the IRS, because basically they stopped all collection efforts. Kind of when COVID hits, the beginning mm-hmm. of COVID, the government pretty much decided that, the population is already dealing with this pandemic. Mm-hmm. We don't need to kind of make things worse by going after them for past due taxes. Yeah. So they effectively shut down all collection efforts, or at least aggressive collection efforts against anybody that owed money to the IRS. In fact, Congress actually told them to stop sending letters.
Yeah. Wow.
So where you were at, where you, in your story, you mentioned, it's like, well, we don't know what to do, or, we didn't want to deal with it. Well, the government almost gave everybody the blessing of, you don't have to deal with it. Problem is, all that's changed.
Mm-hmm. Yeah, no, that's interesting. So one thing I want to ask a question about is you're an IRS enrolled agent. Like that sounds That sounds scary to me. It sounds like you're on the wrong side of this equation. Are you? Can you define what a enrolled agent is to me and
Oh,
the listener?
absolutely, absolutely. Yeah, a lot of times people think that, oh, you work for the IRS. I don't work for the IRS. What an IRS enrolled agent is, it's somebody who actually gets a license directly from the Department of Treasury
Hmm.
um, to be able to represent people in their tax situations. What a lot of people don't realize, Patrick, is that when you're dealing with an IRS problem, there are only three people in the world that are allowed to legally represent you. One is an attorney. Anybody that's an attorney can legally represent you. A CPA can legally represent you, or an IRS enrolled, an IRS, I should just say, an enrolled agent licensed by the IRS.
Yeah,
That's a better way of putting
yeah,
that.
I like it. Thank
And there's only two ways of getting that license. One, you can actually work for the IRS for 5 years,
you.
and if you work for five years at the IRS, you basically can get that license, or you have to take this a very intensive three-part exam. That's 3 to 4 hours each of the three parts of that exam, and if you pass that, then the IRS actually issues you that license to be able to legally represent somebody. And that's what I did. I ended up I didn't ever work at the IRS, but I ended up taking that exam, and it's interesting because um, who I was and now that what I do is kind of completely different.
Yeah, yeah, no, that's fantastic. And if it's okay, can we get into a little bit of your story, a little bit of your background with sort of
Absolutely.
avoiding the IRS? Yeah.
Yeah, absolutely. What's very interesting is that um, I was actually my perfect client. And here's what I mean by that. Back when I was in my early teens, I was 18, 17, 18, or 18, 19 years old. I actually became an EMT paramedic,
Hmm.
the guys that drive around that ambulance,
Yeah.
right? Um, was doing that work. And I remember, at 18 years old, I was doing a lot of overtime during the
Hmm.
holidays, right? And the reason I was doing that is because I was trying to make some extra income. And I remember the older guy that was working with me, the paramedic on the rig. He's like, Carlos, why are you working so much? And I'm like, hey, it's the holidays, got to make some extra money. He's like, well, just go to your paycheck, claim 10 exemptions. And if you do that, you're going to get a bigger paycheck. You ain't going to have to work. Hey, I didn't know any better,
Yeah,
so
absolutely.
I did that, right?
Yep.
And a lot of people listening to this will do that because they want to get that extra bonus check during the holidays.
Yep.
So I ended up doing that. Obviously, it came tax time a few months later. I had the taxes prepared, and then ended up having a big tax bill,
Hmm.
and I couldn't afford that tax bill. So what did I do? I didn't file that
Yep.
return. And the problem was is that I continued working the next year, never changing it because what does everybody do? Your lifestyle starts reaching that income that you're actually getting because
Yep.
they're not taking out taxes.
Yep.
And then the next year, here I am again in the same predicament.
Yeah.
Didn't have enough money to pay the taxes, so I just didn't file it. Well, Patrick, that happened for 8 years straight.
Hmm.
8 years I didn't file a tax return. And um, it wasn't until so I went through my 20s.
Yep.
Basically, I was in my late 20s, and I just ignored it. And the IRS, back then, IRS actually mailed letters, and
Hmm.
everything wasn't so electronic where they could find you easily.
Yep.
And I never got anything from the IRS. And what's interesting, it was the state of California that actually found me.
Hmm.
I got a letter from them like, "Hey, you haven't filed your tax return." And that started the domino effect of the government finding me and kind of wanting these tax returns.
Yep.
And it wasn't until my mid 30s I actually started deal. I had dealt with California, and
Hmm.
because they were pretty aggressive, which to this day they still are.
Yep.
But the IRS still kind of hadn't really kind of come after me. And it wasn't until my mid 30s
Yep.
where I met the woman of my life and decided I was going to get married.
Yep.
And Patrick, you're going to call me a scumbag here. I ended up marrying that lady, and I never told her about my tax
Hmm.
problems.
Yeah.
And what just happened? My tax problems became her tax problems. So, and I had realized at that moment, and literally it was like a week or two after I had gotten married,
Hmm.
I decided to go find somebody that can help me. And I found an enrolled agent locally.
Yeah.
His name was Ernie, and that guy basically said, "You're a good person. You
Yep.
got in a bad situation, and I'm going to help you fix it." And he fixed it.
Good.
And here I am 10 years or 20 years, or I'm at 55 now. So it's been some time, 20
Yeah.
years later.
Yeah. Yeah.
Um, my wife and I founded the company Tax Debt Consultants,
Yep.
and we basically help people that have IRS tax problems.
Yeah, no, this is great. And you've literally written the book on, this problem and how to resolve it. You've got a number
Yeah,
of books out there. We'll make sure we have links in the show notes
yeah,
for anybody that's looking for those as like an intro to like, where do I start with some of these things? And this
yeah,
conversation is going to lead us there. So let's just play this out. So I haven't filed a tax return for a number of years.
yeah.
It generally starts with, we sort of, and I've just seen this in my own life and other people. It's like we sort of dip our toe in, we get into a little bit of trouble, and then all of a sudden it's like the water's up to our neck, and we're really in trouble. And it would have been much easier to resolve the problem when our toe was dipped in, but now we're up to our neck. So when we're up to our
Exactly.
neck in tax debt, what are like good first steps in this process to like get this resolved?
You know, Patrick, the best step is to know what the problem is. And
Hmm.
one of the most common things I find out with most people is that people that have tax issues or tax debt, they've been ignoring it or kind of burying their head in the sand. And sometimes it's been so long, they don't even know what the problem is.
Hmm.
They know they haven't filed a return. They're not sure when the last return they filed. They're not sure if they actually how much money they owe, or even what government agency
Hmm.
they owe money to. It could have been an IRS bill, a state tax bill.
Yep.
So the big challenge I see with most people dealing with it, and here's what's interesting. A lot of times I'll get calls. People say, Carlos, I need your help. The IRS took money out of my bank account,
Hmm.
only to find out it wasn't even the IRS. It was like the state of California that took the money out of the
Sure.
bank account.
Yeah.
So step number one, and it's part of, I talk about it in my book. I talk about it on the when I'm on the news and on
Hmm.
podcasts. Is you need to know what the problem is, and what we do is we investigate.
Yep.
A good lawyer, what do they do before they represent you? They want to do a full discovery of what happened, what's going
Hmm.
on. A good doctor, me being a former paramedic,
Yep.
is a doctor doesn't, if you got a headache, I use this analogy all the time. If you got a extremely bad headache, you don't call your doctor and he doesn't say show up next week for brain surgery, right?
Right.
You would say, okay, that's malpractice. What do you mean?
Hmm.
He's going to say, well, let's get you in here for your blood labs and X-rays.
Yep. Yep.
Let's figure out what's causing these problems. And that's the same thing with the IRS. If you got a problem like unfiled returns or large balances, we want to know how much money do you owe? When's the last time you filed the taxes?
Hmm.
Taxes. When does your tax debt expire? A lot of people don't realize tax debt actually expires.
Yep.
Do you qualify for penalty or interest abatement that you don't know of? We actually can see that in the internal records of the IRS if somebody qualifies for that.
Yeah.
So these are the type of things that we're looking at. So the number one thing before anybody does anything, you don't want to pick up the phone. And we always say, don't pick up the phone and call the IRS,
Hmm.
kind of fishing for information, because you know what they're going to do? They got you on the phone. They're going to start asking questions.
Yeah.
You can't legally say, well, I don't know if I'm not working. I don't know where my bank account is, because that's the first questions they're going to start asking.
Yeah. Yeah. No, that's great. And so I guess my question is, as an enrolled agent, can you help me
Yeah,
do that diligence? Can you help me
absolutely.
figure out like, because I look at that, I'm like, yeah, I guess the first thing to do if I don't know anything is to call the IRS and start asking like, how much money do
Mhm.
I owe? But
Right, right.
yeah, how does that process work?
As an enrolled agent, what I end up doing, we file a power of attorney on your behalf,
Hmm.
and what we typically do, especially the IRS hasn't really kind of been coming after you.
Hmm.
In other words, you don't have like a bank levy or wage
Yep.
garnishment currently. We do that silently, and we fax that all electronically.
Yep.
That way, that gets processed internally, and then what we do, we push a button, and all your internal records from the last, I end up going 20 years,
Hmm.
shows up into my computer system,
Yep.
and I'm able to decipher everything that's going on at the IRS.
Got
So
it.
we're able to find out all this information we just talked about. How much money do you owe? Kind of everything that we just talked.
Yep.
When's your debt going to expire?
Hmm.
And then if you haven't filed tax returns, which tax returns are they looking for? A lot of times, the IRS has this little rule, unknown rule called a 6-year rule. If you've gone more than 6 years of not filing taxes, the IRS doesn't want all those tax returns. they may only want 6 years to get you fully compliant.
Yep.
So
Interesting.
this is the information that we're finding out. And then once we have that information, we can come up with an amazing strategy or game plan to resolve this tax debt or unfiled returns.
Yeah. This is great. And so I'm thinking of two different sort of categories that people can fall into, right? Like on one hand, if I'm a W-2 employee, the
Hmm.
IRS is going to be receiving a bunch of information from my employer on how much money I'm
Correct.
making, right? So I
Correct.
can pretend like that problem doesn't exist, but they're aware in their system how much money
Yeah.
that has sort of flowed through my hands just from a
Right.
W-2 perspective. Then I got the other category, which is probably the entrepreneur, and
Hmm.
it's probably not as clear to the IRS how much money they owe
Hmm.
because a lot of the revenue comes in. They might get some 1099s, and those 1099s would be sent in by the other party and
Right.
so they might have a little clue, but it may not be like as quite apparent on that
Exactly.
side. Can you walk us through like sort of maybe both of those examples, like the
Yeah.
entrepreneur that uh, they could be staring at a huge problem just because they
Yeah.
don't have clean books. I don't know. It could be, in my mind, it's a little more messy over there because it's sort of
Right.
well unknown and
Well,
maybe not, but yeah.
it's interesting you brought that up because I was right before this call. I had a consultation with a client that's hiring me,
Hmm.
and she had told me that she had $100,000 bill that the IRS had issued to her, and I had said, "Well, what do you do?" And she's like, "I'm in the auto repair. I'm in the auto business." And I'm like, "Okay, auto. That doesn't tell me much, right?"
Hmm.
As I started fishing, I found out that she actually sold auto parts online.
Hmm.
So what had happened is that, and we've been hearing this on the news quite a bit, and you've probably seen it, where
Hmm.
all these 1099s are, as low as $600.
Yep.
And basically, if you sold anything down to $600, that's kind of like their magical number that they want to
Hmm.
do. That it's going to be reported to the IRS, and this is kind of what happened with her. PayPal, that's what she was using,
Yep.
reported all the net sales to her,
Hmm.
and she didn't file a return. So all the government can assume, if all they're getting is net sales,
Yep.
they're just going to assume that that's your net profit, and now you got this big giant tax bill.
Right.
And I told her is that what you have to do is file a return so you can claim all the expenses,
Yep.
because she said it. Well, we got to buy all these auto parts stuff so we can turn around and sell it.
Yep.
And I go, yeah, we know that, but the IRS doesn't know that.
Hmm.
So when it comes to entrepreneurs, the government is getting really good,
Yeah.
and they really are cracking down on cash. What's the word? Businesses that deal with cash.
Yep. Yep.
Yeah, there's all kinds of new requirements on when you
Yeah.
have to issue a 1099 to somebody. So um, you're right. In years previous, it was a little bit easier. The IRS really didn't know what these entrepreneurs were doing. A lot of the side gig stuff that was happening,
Yep.
but it's starting to get cracked down pretty dramatically, and the IRS is going to start having better ideas, because you got to remember is that not only are they looking at 1099s, but they're also looking at bank interest statements,
Yeah. Hmm.
investment account interest statements.
Yep.
I had one individual, he swore up and down that he didn't make any money in his business, but I'm like, but how are you supporting $1 million mortgage bill? The IRS knows you have a interest mortgage on this $1 million house.
Hmm.
How are you paying that?
Yep.
So again, you can't hide.
Right.
It's really tough to hide.
Yeah. Yeah.
And what's neat is that when we do that investigation that I talked about earlier, we can get copies of everything that was sent to the IRS for the last 10 years.
Wow. Okay.
So
Yeah. That's great. Okay. So this is fantastic. So now we as my representative, you're
mhm,
pulling all this data down and you're going,
yeah,
okay, we're going to do some diligence. We're going to assess the situation
mhm,
before we make any phone calls. We're going to
yeah.
get a clear path forward. So now what? Now we've got all the data in front of us. What do we do now
Yeah.
to start attacking
So
this problem?
great question, and that goes to part two, and how. And this is exactly how I saw. I don't care if you got a $5,000 problem or a $5 million problem. It's the same three steps. Now we know what the problem is, as you mentioned.
Hmm.
Step two is that now you got to become compliant with the government. And what does that mean? The IRS has a specific guideline for you to be able to deal with your tax problem. You have to be compliant. And that basically means the last 6 years of tax returns minimum have to be filed,
Hmm.
period.
Yep.
As long as those are filed, you're halfway through your compliance. The second part of it is they're going to be looking at your most recent tax year. So as of right now, it's going to be 2023, right?
Hmm.
So that was the last tax return you did. They're going to look at, did you get a refund or not? If you didn't get a refund, if you got a refund, great, you're fully compliant. That means you're not going to, they're assuming you're not going to have a tax bill next year in 2024.
Okay. Good.
However, let's pretend you did your 2023 taxes and you had a $10,000 tax bill.
Yep.
Now the government says for you to be truly compliant, you have to make sure your estimated payments based on your $10,000 tax bill last year are all current. So as of right now, we're in October, that would be $2,500, $7,500 have to be paid into estimated taxes.
Yep. Yeah.
And this is primarily, if you're self-employed, this is the big issue here,
Hmm.
is now once you're, and if you've done that, either you're making estimated payments or you're W-2 and they're just taking enough taxes out
Yep.
and all your returns are done, you are considered fully compliant. Now the IRS pretty much gives you the blessing of, okay, now let's go deal with your tax problem. What most people don't realize, they always ask me, Carlos, what's my most important tax bill? The one that I owed 10 years ago? I go, no. To the IRS, the most important tax bill you got is next year's taxes.
Mm.
They want to make sure that you're not going to add more taxes to your past due taxes. So that's why they're looking at these estimated payments, because what they're trying to do is effectively stop the bleeding, another medical term.
Yep.
They want you to stop the bleeding. They want you to stop owing taxes. That way they can go deal with the old stuff if you owe money.
Hmm.
As long as we're not going to owe any more money, let's figure out what are our options to deal with the past due taxes. And assuming we're fully compliant, now we can move on to phase 3.
Yeah. Yeah. No, that's great. And I guess my question would be like, what if I can't move forward? Like, what if I can't get caught up? What if I can't, get
Great.
ahead? Because I am somewhat familiar with some of the payment plan options out there
Yeah.
that are offered through the IRS. Is that like the next step, or yeah, what do we
Yeah.
do?
You know what? Now we're literally part 3 of this thing is
Hmm.
like, okay, now we got this tax bill.
Yep.
What do we do with this tax bill?
Hmm.
Um, Now it ultimately comes down to where are you today financially? What is your ability? And ultimately, that's what the IRS wants to know.
Hmm.
What is your ability to pay your past due taxes?
Yep.
And one thing that's great about the IRS, as much as everybody hates them, you know what? They don't want to throw you out in the street.
Sure.
They want to know, okay, what is your net income after your taxes?
Yep.
Making sure we pay your taxes so we don't owe again, right? What's
Yep.
your net income? And then the IRS really they want to know how much are you paying for your mortgage, your
Hmm.
rent, your utilities, your car loans, your car insurance, your gas. They're looking at all these items, and these are things that I'm looking at
Hmm.
because I want to take a look at all that information because the government's going to want to know because there's a variety of different ways we can do it. If we're dealing with somebody who's literally they cannot afford. I had somebody earlier. We had a $500,000 debt,
Hmm.
and there's no way, based on their current income, they have the ability to pay for that.
Yep.
So with them, I determined you are a hardship. You don't have an ability to even make any payment to the IRS.
Yep.
So we're going to go to the IRS and ask for a hardship, so you don't have to pay nothing, because we need to get you back on your feet.
Yep.
And that's what I'm trying to figure out.
Yeah.
Is it a hardship? Is it a payment plan? Is it a partial payment plan? Or is it kind of what I call what everybody sees on TV, the offer and compromise or the fresh start, as that name is thrown out all the time,
Yeah.
is, we're settling the debt for pennies on the dollar. It does exist, but
Yep.
there are some really hard qualifications to qualify for something like that.
Yeah, and that totally makes sense, right? Like if everybody could just not pay their taxes and then just go, pursue an offer and compromise, and the
Yeah,
IRS was like, "Yeah, sure, don't pay it." Guess what? Nobody would pay their taxes, like
exactly,
so. Yeah.
exactly. And what's sad, Patrick, is that there are so many, and the IRS is warning people to this day on their website. there are so many offer and compromise mills
Mm-hmm.
where companies are, and you hear them on the radio and TV, and it makes it sound like the IRS is giving this away like candy.
Right.
And I've had so many people come to me saying, I paid this company $10,000. They said they were going to be able to settle my debt, and then uh, and then they disappeared on me. And I'm looking at their numbers, and I can tell in 5 minutes whether they even have a chance. And I'm like, okay, you have $500,000 of equity in your home.
Right.
You have, and you only owe 100,000. There's no way in the world the IRS is going to do it. And
Right.
they're like, well, that's not what they said. And that's and what they are. They're just scam companies.
Yep.
They pop up, they take advantage of a lot of people,
Yep.
and then they disappear a year down the road, because a lot of people don't realize that offer and compromise can take up to 18 months to get processed.
Yep.
So that gives them time to collect a whole bunch of money and disappear on people.
Yeah. And unfortunately, we've seen some of this in the employee retention tax credit stuff that's come
Yeah.
through. Like all these firms popped up, like, hey, we can get you all this money. And the crazy thing is the IRS shut those down. They paused doing
Yeah.
those. But what was happening is it wasn't like it was an application process. If you submitted the correct paperwork, you got money back. Now, that doesn't mean you won't get audited and owe that money you got back, but this firm will be long gone. They'll have already taken their 20% of the ERTC credit that you got. And it's like, you have no recourse in getting, because you're going to owe the money plus maybe some tax and penalty and all the other stuff that comes along with it. And it's like,
Right, right.
you got to be wary. You got
Yeah,
to talk to real professionals, people
yeah,
that have been in the game
and that
before.
and the whole ERC thing is really bad. I was just in a conference, IRS conference down in San Diego. This was a month and a half ago,
Mm-hmm.
and they had IRS CI agents there, and they
Yeah.
were talking about this. The amount of people that they're planning on putting in jail because of a lot of it was just illegal
Mm-hmm.
applications. They literally never even qualified for the program.
Wow.
Um, and somebody had even asked specifically, is just like, well, wait a second. But the companies told them that they qualified, and they're like, ultimately, it's your responsibility
Yep.
to make sure that you truly qualified. Yeah, we'll try to go after the company. The problem is a lot of those companies, they'll never find them
Yep.
ever again.
Yep.
So
Yeah. Okay. So we've touched a little bit on offer and compromise, but if I'm not mistaken, there's like some short-term payment plans, some longer-term payment plans. I can get into a payment plan. Life can go sideways. I might be able to,
yeah,
rework that plan. And it
yeah,
sounds like from what we're talking about here is, the IRS might not be as, big, bad, and ugly as we think they are. They're not going to throw us out on the street. It sounds like they're willing to work with us if we get the right people in our lives that know what they're
yeah.
doing. So can we talk a little bit about through, what those different options look like and how we get around to getting those set up?
Yeah, literally, when it comes down to a payment plan, the IRS again, they're going to look at. They want to see what's your ability to pay.
Mm-hmm.
So yes, they're going to be looking at what your current income, what your current expenses are,
Yep.
and then you know what, they already have an internal number. And again, we can see what that internal number,
Yeah.
what they want for an installment agreement.
Sure.
So, so when I pull that power of attorney, I'm looking at that number. Now I'm running through their numbers,
Mm-hmm.
and then and I'm looking at their ability to pay, and then I can tell somebody, well, you know what, based on your numbers, you qualify for a full pay. In other words, you're going to have to pay this over a certain amount of time,
Mm-hmm.
and typically it's 72 months. The IRS gives you, depending on how old the debt is. That's typically, if you have a newer debt, they can give you up to 72 months.
Hmm.
So they will bend over backwards to get their money,
Yep.
whatever it takes.
Yeah.
Now, what if you don't have that ability to do a full pay? We run through your numbers, and the IRS wants $2,500, but you can only afford $300.
Yeah.
The IRS does have what's called a partial pay installment agreement.
Hmm.
Well, they will take a partial payment, and again, depending on assets and resources of what you have, if a partial payment is good enough, they will take that partial payment, and they may even cancel the debt after doing that partial payment for a couple of years.
Nice. Okay.
And the IRS really is bending over backwards to make sure that they actually get paid.
Mm-hmm.
Um,
Yeah.
Now, obviously, one of the things I'm always telling people, if you got real estate or any type of assets, and I know a lot of your listeners will
Mm-hmm.
have assets, is that you got to understand, though, if you got a large debt or a significant amount of debt, there's a very good chance that IRS will place a lien on that property.
Mm-hmm.
They hadn't done it for 4 years, but the IRS has told us they're getting ready to start the lien process in the next few months.
Yep.
So all of a sudden, people might start seeing these lien notices going out on their current assets if they have those large balances.
Yeah, this is great. So we've talked a little bit about resolving it, and I think I think it's worth discussing what happens if we don't take any action here. Like
Uh,
you've mentioned a few things, right? We've talked
yeah.
about liens. I also heard you talk about garnishments at one point. Like,
Mhm.
the IRS can attach to our, paycheck, and I don't know what percentage of that is, 25, 30%,
Yeah.
of our paycheck they can, I believe, suck out before it ever hits my bank account, which is, a problem.
Yeah.
I'm sure could be a problem for a lot of people. So can you talk about what are some of the negative impacts if we don't take
Yeah.
action? The IRS finds us,
That's
and
what can happen. Yeah.
yeah,
Well, I'll tell you this. And as when we started this, I said the IRS has done nothing literally for the last
hmm
approximately 4 years. But January is 2024, earlier this year, the IRS literally notified everybody, especially us, and notified the IRS personnel, get back to work and restart the automated collection that we had stopped.
hmm
So if you owed money to the IRS or had unfiled returns, a lot of these people started getting notices, basically letting everybody know we didn't forget about you. You still owe us money. We're coming to collect. And they sent out a very important notice. It's called CP 504. It's a certified notice that basically says this is the final notice before levy.
hmm
What's interesting about that notice, it's really not the final notice. But what I tell people, that notice is literally the gunshot across the bow.
yeah,
Is that the IRS knows you owe money, they're going to come for it. Time to start working on your game plan
yeah,
with that CP 504 notice. Well, the crazy thing happened that we weren't even expected as tax professionals until the end of the year is after the CP 504. And when I say CP 504, guys, if you have an IRS notice, take it out, look on the top right corner. It will say CP 501, 2, CP 503, CP 504. So that's that 504. So just look in that top right corner.
yeah,
So once you do that, the next letter after that letter is called letter 11. And Patrick, this is the letter that everybody needs to be afraid of.
hmm
And the problem is that so many people don't open those IRS notices; they leave them unopened.
yep,
You can't. You have to respond to this letter
hmm
because letter 11. It says letter 11 on the top right corner says this. It typically will come anytime. It's supposed to come out 30 days after that CP 504 notice. But once you get that letter, and the first batch of millions went out back in August,
yep,
it basically says final notice of levy with appeal rights.
hmm
That notice is basically a hard 30-day deadline. It basically says if you don't deal with this tax debt that you owe us in the next 30 days or or request an appeal of this notice,
hmm
we are going to one issue a bank levy.
hmm
That means, and I always say, a levy is the physical taking of money.
yeah,
They're going to take money out of your bank account. They have the right to do a wage garnishment. It could be 20 up to 25%.
yeah,
I've seen 30%
hmm
before. And here's another one, Patrick. Most people don't know this. They can take up to 100% of your Social Security.
oh, geez, okay,
I
yeah,
spent a year fighting one that they took 100% of my 68-year-old Florida woman's Social Security for over a year.
geez,
So that's what that is. And
hmm
then they can, with that letter, it's also a notice that they can actually file, typically start the process to file a tax lien.
hmm
So that is what happens if you ignore this.
yeah,
And like I said, so many people just, they're burying their head in the sand because they
hmm
get the notice and they toss it in the drawer or throw it away. You got to open this because we can stop this entire collection process,
hmm
but we have to open the letter so we know what the time frame is for us to stop that.
yeah.
Um,
Absolutely. And I think it's okay to acknowledge too, like most people in this situation have a lot of life going on, and it's
yeah,
usually not good stuff. And
yeah,
so they're just like overwhelmed by life in general. So the mail just keeps piling up and then the
hmm
problems keep piling up. And so like just an encouragement out there is like, just sit down, open the mail, get through
yeah,
it all, because there's probably not just IRS debt. There's probably credit card debt and, other
exactly.
things stacking up. And from my experience, when we were proactive in those communications, we got way better outcomes because
Mhm.
like we just found everybody wanted to work with us when we were proactive, because most people just stick their head in the sand and then they're like, well, okay, we're just going to utilize all the tools available to us to try to collect on this. So that's really good. And then it's also good to acknowledge too, right? Like as long as we're not taking action, we've got things like penalty and interest. All of these things are just accruing, right? Like the IRS just keeps
Really?
stacking this number up, and it keeps getting bigger and bigger, compounding
Yeah.
year after
Right.
year. So,
Yeah, a lot of people don't realize the penalties and interest accrue daily.
mhm.
And not only do you get interest on your tax debt, and not only are you getting penalties, but you're getting interest on the penalties. I mean, so yes,
Yeah,
it's just compounding
yeah.
and growing extremely fast.
Yeah. And so just to go back, when we call Carlos, we say, Carlos, help, and we start a plan, once we have an agreement with the IRS, like does it pause all of those like interest
Stops
and
everything.
yeah, yeah.
Stops everything. You're officially the goal. Here's the goal. The goal is once you come up with the plan, you're out of the IRS's collection system.
Hmm.
um, which is what you want because you don't want them coming after the bank accounts or your investment accounts or placing or doing anything aggressive against you.
Yeah.
So you have to by doing something by speaking to them basically, and that's my job. You know,
Yep.
if you're coming to me, I'm your guardian before the IRS, right? You
Yeah.
will never speak to the IRS.
Yeah.
Um,
Good.
so that stops that entire process.
Hmm.
So and it's scary. And I'm telling you, every day dealing with the IRS, it's I deal with it every day.
Hmm.
So I have a really good. I have IRS agents, and you got to remember they work worldwide, right?
Yeah.
I'll pick them up and I'll recognize them because I call there so much.
Sure.
I tend to sometimes I get the same people over and over again, and all they want to do is they want to just close this account
Hmm.
and get it out of collections.
Yep.
And here's what Patrick, what you don't want to do because here's what's starting to happen. People have been ignoring this for so long, their case eventually gets assigned to an IRS revenue officer,
Hmm.
and that is you're in bad shape if that's happening because that's basically now your case was sent to a local office in your area with a specific agent that's probably doing a background search, probably driving around your business, probably driving around your home. And
Yeah.
here's what they're doing research.
Yep.
What cars are you driving? Where are you working? So they're doing that because their only job is to collect the debt.
Hmm.
And they have all the power that the IRS can give them to go collect that debt.
Yeah.
And their rules are slightly different than dealing just with the IRS's collection system, their online collection system, their automated collection system.
Yeah.
Remember earlier I had said that typically all we need are 6 years if you haven't filed returns
Yep.
to get you compliant. Well, the revenue officer could turn around if it's been more than 6 years. He can say, "No, I want all 10 years."
Yeah.
So I tell people, do everything you can to to get into compliance and to start working on this before it gets assigned to a revenue officer.
Yeah.
But the problem is there's a lot of people that it's. I just had one business owner recently. I called over there. I wanted to deal with it, and there's like, sorry, we can't even help you because your case has been assigned to the revenue officer. But there wasn't even a revenue officer assigned. They were just waiting for somebody to get assigned to the case.
Wow. Yeah. Okay. So this is good. I think if we back up just a step, so let's pretend my I believe you called it letter 11.
Letter 11. Yeah.
Yep. It comes across. I ignore it. Okay.
Yeah.
Now all of a sudden I get levy on my bank account. They're
Yeah.
drawing some dollars out of there. Now they
Uh-huh.
really have my attention because I'm like, oh,
Yes.
I can't buy groceries. I can't pay my mortgage. Can't do
Yeah.
these things. Um, I assume I can still call you
Yeah.
and we start the process. It sounds
Right.
like, I can only ignore so long. It gets to a revenue officer and now I'm in trouble if
Exactly.
yeah. What happens if we're to that point? Do you just
Okay,
have to
yeah,
deal
yeah,
with the
that's a
revenue
really
agent?
good one
Yeah.
because that happens quite a bit. That's usually a lot of times that's people wait until they're swiping the card at the grocery store and they can't
Hmm.
buy groceries, right? And they're
Yeah.
like, "What's going on here?" So here's the good news: even if they do that, if you find out that your bank account and you're going to think your bank account has been zeroed out, The good news is the government hasn't taken the money, whether it's the IRS or the state. The money has not physically left your account. What they did is basically told the bank is that you owe money, and to put a hold on that money that's in the bank account. So the money is still there.
Okay.
So the good news is with the IRS and the FTB, the time frame is very similar, is that you got roughly 10 days, 10 business days to deal with this. So, and I always tell people, yes, they say 10 days, but specifically like with the state, they specifically say, don't wait until day 10, because even if we were able to release your money back to you, problem is by the time the bank processes the paperwork, that might be 2 or 3 days later.
Yeah.
The money, they might accidentally send the money. And this has happened. I had a specific client that the state of California took $50,000 out of his bank account, and then he waited too long and the money was actually sent off. And now we're waiting months to get that refund because he never owed the money in the first place.
Oh.
So the thing to just remember is if you find out that that happened to you, you immediately need to call. If you're going to deal with it yourself, go try to call them up.
Yep.
If you're hiring me, call me immediately, because we can start the process of getting that money back. And I've gotten the money back same day many times. So again, you said it perfectly. The reason they do that is to grab your attention.
Yep.
Because once your money's gone, it's going to grab your attention. You're going to do something about it.
Absolutely. This is great. Okay. So we've talked a lot about, federal income tax. I know you're located in California. In California, we actually see a number of clients like leaving California because they're like, geez, I'm making healthy money now. And the money I'm sending to the state, I can go buy a house in, Texas or some Florida or some other state that doesn't have, as high as income tax. But can we talk a little bit about the state tax debt? And I'm sure every state's different and there's lots of different rules, but I think I'm going to make a general statement and you can correct this. We've found out that sticking our head in the sand is not an effective strategy. Dealing with this is absolutely the best way to go to sort of stop the penalties and fees and interest and all those other things from continuing to accumulate. But do you have some best practices, maybe from a high level? And you can get into California, because California's got so many different layers of tax if you want. But can you talk through state tax?
I can tell you this. I have a nickname for the state of California. It's called Cali Claw. I talk about them in my email all the time. Cali Claw, because they tend to claw at your bank account. They tend to claw at your wages and things like that. Is owing state taxes is 100 times worse than owing the IRS, especially here in California. And the states that do have, New York, Chicago, quite a few of these states that do have state, and they'll all agree. All my colleagues in those states will say the same thing: is when you got tax problems, like the thing that I always do, I'm always asking about their local state, because they are so aggressive and they're going to move 100 times faster than the IRS to get their money. One, they know that the IRS, if you owe the money to the IRS, they're going to get their money. So what do they want to do? They want to jump in front of them and get your money before they get your money. So they're moving much faster. So two, like California, they really do not cancel tax debt. They've told me that multiple times. If your client can't afford to pay us, we'd rather stick them in a hardship and leave the debt there and eventually get paid. And that might be when they die and we collect from their estate. That's how they look at it. California does not like doing offers and compromises whatsoever. I've only done one in all the years I've done this. And that was a nightmare of a case to try to get them to agree on that. So if you got a state tax problem, we want to deal with that immediately, because one of the good things about dealing with your state tax problem is I want to make sure that we're on some type of an agreement, some type of payback to them, because when it comes down to go dealing with your IRS, I'm going to use that debt that you're paying the state of California as an expense when dealing with the IRS. So, and I've had situations, I'll give you a perfect example, Patrick, where I've done the financials for the IRS and it looks like, whoa, you can afford to pay the IRS $500. But then I go look at their state bill and I'm like, oh, you got a pretty big state tax bill. Let's give the state that $500 and pay them off, because they're never going to go away. Now we got nothing to pay the IRS. Now we have a lot better options here to deal with the IRS and maybe do an offer and compromise or something like that. So there's really kind of some technical strategies in regards to dealing with state tax debt and IRS tax debt. But my main thing with the state is just that they do not like to negotiate or
Yeah.
whatever. As an example, the state of California, for the IRS, there's a 10-year statute of limitation to collect on debt.
Mm-hmm.
Yes, tax debt can expire, and it does. In fact, I had a client I was dealing with today, talking to the IRS. I wanted to do a hardship, and they're like, "We can't do that right now because they got $35,000 that's going to expire in 3 weeks. So you need to call us after 3 weeks." I'm like, "Oh, that's fine. We'll just do it." I mean, they're
Yeah.
literally telling me it's going to go away in 3 weeks. I'm like, "Okay, that's fine."
Wow.
Well, the state of California has a 20-year statute of limitation, but there's like 50 different things that actually will extend the time. So a California manager told me, yeah, it's pretty much a lifetime statute of limitation for California debt.
Wow. All right. I mean, I love California. I love how beautiful it is. I love the ocean and the
Yeah.
mountains and all the things going on in California. But I think one of the lessons here is don't let your tax bill
Oh,
get out of hand with the state of California. It's
you know what, Patrick, and just talking about California, this might be really important for your listeners. California is really cracking down on looking for people that might owe them money. And two things. One, if you owe California debt and you think that you're moving to get away from it, whether to a different state or even out of the country,
yeah.
it's not going to work. They're going to find you. I dealt with a pilot that lived in Singapore for 20 years, and they found out that he owed tax debt. So, and they collected.
Yeah.
So that's the first thing, right?
Yeah.
The second thing is there's a lot of people that use a mailing address. It might be a parent's mailing address, maybe for a bank account, maybe for whatever reason they're using a California mailing address. Do not do that in California. California is now, I'm getting multiple people coming to me saying California has assessed a tax on them because they believe that they lived in the state, so they just made up a tax based on their occupation because they never got a filed tax return. And it was the only reason that they did that is because the person had a mailing address and had one statement like going there.
Yeah.
So California just assumed that they were a California resident and they owed California taxes.
Got it. Wow. Okay. California's aggressive. I see that. And we've had some clients that have moved from one state to another, and we've actually engaged legal counsel to help them just very clearly identify what things need to happen to establish residency. So there's like a
Absolutely.
clear line in between, like, hey, I am no longer a resident of that state. I'm a resident of this state. I don't want them, in states like California, New York, New Jersey, are they're not afraid to go after these people that they feel like are just skipping out on their state income tax. So
Absolutely,
yeah.
absolutely, and that's what California is trying to crack down on. So they do a lot of these fake, and I know you have a lot of advisors here that watch the show. If all of a sudden you get a client that literally gets a tax assessment from California, maybe they never lived there. This is probably what's happening. For some reason, California just believes that they had a filing requirement, and they will make up a tax.
Wow.
And they will collect and they will do bank levies on those things. So our job is to try to reverse that process to show them that there was no tax filing requirement. So.
Thank you. I guess my question is, the state just decides to levy some tax, but you legitimately don't owe it. How do you go about like fixing that? Because I don't file a tax return for money I didn't earn. So it's like, what do we do to fix that issue?
Yeah, so I'll give you a client example. This was a great one. Had a client called me up. It was an attorney, found me on LinkedIn from India. This was the client that they took $50,000 out of a bank account, and it was a bank account in Massachusetts. He lived across on the East Coast, right? And he had told me it was the Franchise Tax Board, Cali Law, right? So and I'm like looking at this. He goes, "Carlos, I've never been to California. I've never lived in California. I've never worked in California. I don't know what this is." So we signed a power of attorney, and I started doing some investigation. And for some reason, somebody with a similar name to him got issued a 1099 up in in the San Francisco area, and the address and California is telling me, yeah, he doesn't owe 50. He owes like $100,000. And, we just took the 50 because that was in the bank account. So I'm looking at this address, and so I ended up doing kind of like became a PI. I'm like going on Google Maps, and it's
Hmm.
literally like a strip mall. So
Hmm.
it's a strip mall, and I'm going, okay. And I asked the guy, "Do you know what this is?" He goes, "I've never been to California. I have no idea."
Yeah.
We were going back and forth with California, and finally came back to California, and literally they came back and they said, "Oops, we made a mistake. Yeah, that wasn't him. It was a oops, we made a mistake." But by
Wow.
this time, the money had already been. Remember the 10-day time frame? Well,
Hmm.
he called me way after the 10-day time frame, so the money was actually. Here's what's interesting with California: when the bank gets the wage garnishment, it gets sent to a third party processing company. And then once they get the money in 2 to 3 weeks, then weeks later, they mail a check to the state of California. And it could take California almost 4 to 6 months
Yeah.
for them to physically get the money that was taken from his bank account. So with this guy, we got the letter from California stating they made a mistake. He never owed the money. And now he's still waiting. We're 5 months into this for that money to come back to him, that 50,000 that they took from him.
It's amazing. They're so quick to take it, so slow to give it
Oh
back.
yeah, but it
Yeah.
takes forever for them to get it.
Yeah. Wow. Wow.
Yeah,
So, Carlos, this has been fantastic. Has there been anything that we haven't talked about as far as tax debt goes that we should discuss
yeah.
before we wrap up?
You know what? The only thing I'm telling, the main thing for everybody, and whether it's you or your clients, is just you can no longer ignore the IRS letters.
Hmm.
You know what? For 4 years, even if you happen to get a letter, you could literally ignore it because the IRS wasn't doing nothing.
Hmm.
That is no longer the case.
Yeah.
These letter 11s, and the IRS says there's millions that are going to be going out over the next few months. We already went through that first cycle. There's literally going to be a 30-day cycle of all these letters.
Yeah.
If any of your people get a certified letter from the IRS, it has to be open
Yeah.
because there's literally a 30-day deadline to deal with that. And we effectively have an emergency break the glass button to stop all the collections so we can figure out how to resolve their situation. But if they miss that deadline, you've just put yourself in a really bad situation. Because if the IRS does a wage garnishment or the state does it, and the state won't release a wage garnishment
Yeah.
until it's paid. They're pretty
Hmm.
strict
Yeah.
on their wage garnishments. But it just, you don't ignore these letters anymore. Open the letters
Yeah.
and then just deal with it because it's much easier. And going back until what happened to me, you know
Hmm.
what? The number one thing I hear from people all the time, and it's the way I felt when I talked about my problem, deal with it. It was a ton of bricks off my shoulders, knowing that I don't have to be afraid anymore.
Yeah.
That there is a way out, and
Yeah.
as long as you do something and make that initial move to call somebody for help or to ask for help, you just started that process to finally get this thing resolved.
I love it. Yeah, and I totally agree with you. It's like it is awfully relieving when you have a game plan and it's like, all right, I know the path forward, and it might not be very comfortable, but at least I know where I'm at, and we can
Yeah.
get this resolved. And at the end of the day, it's the best financial decision to engage with somebody like you, because now we stop the tax and penalty. And when I think about that, carlossamaniego.com, we'll have a link to that in the show notes, is just a wonderful resource. It's a good way to connect with you. It's a good way to see, everything from, the media appearances you've made and all those other things.
Well,
Is there a better place for people to
yeah,
connect with you?
you can go to my company website,
Yeah,
taxdebtconsultant.com.
great.
If you go there, there's all my contact information there. One last link, if you go to taxdebtbook.com,
Yeah,
I offer you can buy it on Amazon if you want to pay me a few dollars, or you can just get a free PDF version of this book, How to
wonderful.
Make the IRS an Offer They Can't Refuse. And that's at taxdebtbook.com.
Great.
But yeah, just do that. And
All right.
this has been a lot of fun.
Yeah, Carlos, thank you. I think this is, we talk so much about tax planning on the front end and being proactive, but sometimes you get yourself into a situation that you're like, oh boy, I need to get out of this, and You're a fantastic resource. I
Thank
appreciate
you.
all the wisdom you shared today, and can't encourage people more. If you're dealing with the tax problem, get in touch with Carlos and his team, and they will help you get out of it. It's not something you should ignore uh, sooner rather than later. So, thank you, Carlos.
Sounds good.
You have a great day.
Thank you.
All
Take
right.
care. Bye bye.
Bye. As we are getting our year-end tax strategies implemented for our clients, we wanted to give you the tools that you need to save big money on tax this year. To get access to those tools to help create a strategy, go to vitalstrategies.com/cornerstones. Now, this offer is filling up, but if you're one of the first 100 people to register, we'll give you free access to the tools that our clients have paid us tens of thousands of dollars for. These tools are designed to help you pay less tax so you can build more wealth and live a great life. Again, that website is vitalstrategies.com/cornerstones. I want to remind you to rate and review the Vital Strategies podcast on your favorite platform. Your feedback helps us towards our goal of saving our clients and listeners over $1 billion in taxes. These dollars are better used in your hands versus the government bureaucracy. Thank you for listening and for being a vital entrepreneur. You're vital because you're the backbone of our economy, creating opportunities for your employees and driving growth. You're vital to your family, fostering abundance not only financially, but in all aspects of life that matter. Finally, you're vital to me because you strive to build wealth, make an impact for your business, and live a great life.